And a very good morning to everybody, and welcome to the TriggerCharts pre-market rundown from Friday, March 26, 2021. I hope everybody's doing well, and you are, in fact, having a profitable week. It's been a little tough out there, I'll give you that. We're having a substantial amount of volatility, and clearly there is a substantial amount of movement one day versus the other, back and forth from the tech to the value to the banks, back to the energy, back to healthcare, and swirling around. SPACs are in favor, they're out of favor. It's quite a remarkable environment. Before we go any further, I want to mention that this discussion is for educational purposes only. It is not to be considered an offer to buy or sell any security. It's not to be considered a recommendation of any kind. So I want to make sure that everybody is very clear about that before we go onward. It is geared to give you some real good base information and education on how to look at trading from the aspect of volume and price. Basically, what we're doing is we are looking for those levels in the market that combine very significant price stability as well as volume combined together in a way that shows us a bit of the footprint of where we are from an institutional and maybe even hedge fund, where the players are really placing their bets. And we do so with these horizontal lines you'll see to the right over on the page that you're looking at right now. You see we have all these horizontal lines, and then we have color coding. Basically, what's important about this, and I tell everybody this all the time, I designed this because I wanted something very easy to understand, and it's nothing easier than taking a quick look at a chart, seeing the colors, seeing the direction, seeing the trend, seeing the widths and ranges of our altimeters, looking at the colors on the autopilot, and this is all part of the Commander series. I'm a little bit under the weather today. I had the vaccine on, what day was that? Tuesday. So, if you kind of hear me in and out a little bit today, you'll understand. I had a little bit of a fever after the first shot on Wednesday, kind of a little bit crampy and not feeling so good. So this is the 2 to 3 day period they're talking about, I guess, that you don't feel so well. So bear with me today. The show must go on. So the other thing I want to mention is, of course, you can ask any questions you want over in the chat panel. Also, if you have some names or symbols, whether they're in the area of futures or currencies or ETFs or whatever you want, we'll take a look at it. Where are we? Let's get a quick update. We got the YMs up 135. That's the futures on the Dow Jones, the ES, or we call them the SPUs, up 11. And again, the Qs are lagging a lot better than they were, well off the lows. This was down about 70 before the inflation numbers came out this morning at 8:30. I think that we have to all agree that markets right now are a bit directionless. And when I say that, it is the leadership changes really from day to day. We are finding that there is a bit of a buy the dip as usual, consistent with a drop into the 10:30 or 10 o'clock or 11 o'clock hour. And then all of a sudden there's some reason, one reason or another, that buyers step in and start really buying. However, you have to wonder how long that's going to last, because it is lasting. It has been good. It has been good for a while. But you catch that on the wrong side where that keeps on flowing down, that's possibly some very serious damage can be done. I've been talking with people over the last few weeks that have invested in, let's just say, some pretty aggressive ETFs that are very popular right now, and they've gotten wrecked. Gentleman I spoke to yesterday was down $100,000 just on the day, on the early morning yesterday, freaking out what to do. This is not a TriggerCharts client. This is somebody who invests and wanted some advice on investing in general. And I said, listen, what are you doing? Why are you doing it? And he really didn't have a lot of answers. That's what we're dealing with, though, today, is understanding what are the ways that you could actually find support resistance. And I will tell you right now that I am finding that support and resistance consistent with what we show you has been really valuable. We've seen names that are going right to their levels and then bouncing off, or holding for a number of days and then coming up. And that's what is being watched and looked for, searched and sought out in the markets right now, is those names that are yeah, maybe being sold, but at the same time, have the opportunity to move up a bit if that selling pressure is just removed. Now, we have a massive rebalance going on at the end of the quarter. A new note out from JP Morgan and Goldman Sachs yesterday. And if you're wondering what's kind of going on with rates and all that, that's what we're going to kind of get into. I think it's really important just for a backdrop to understand this. It's about a $500 billion stocks to bonds rebalance happening as stocks outperform bonds substantially this quarter. And if you're a hedge fund, if you're a sovereign wealth fund, if you're a pension fund, if you're an institution, oftentimes with a balanced portfolio, what you need to do is bring yourself back in balance. And what happens is there's going to be this significant move from stocks, and it's been working already, to bonds in general. Just a big general concept here for the end of the quarter. And that's going to show up, and it has been showing up, particularly with those names that really moved up the most in the period. So you would think that value, although it's not happening yet, the Dow Jones, the banks, the financials, the energies, the staples, you would think that there would be some selling going on a little bit into the end of the quarter and reversing that, also benefiting growth and benefiting fixed income. So technology, I would expect towards the end of this quarter, which is what, Tuesday, we'll start picking up a little bit just into that number. I think that we know about that right now. That could calm the markets as it's now being priced in, and that's a big issue with markets. The SLR, which is a supplemental leverage ratio, talked a lot about that on the Disciplined Investor podcast, also on DH Unplugged, that podcast. If you're not listening to that, please write that down and make sure you're listening. That was a very significant issue because it ended 3/31/21. The question was whether or not that's going to be allowed to extend past that period. And when you look at where that was in terms of the concern about whether or not banks would have to change their balance sheet calculations for their leverage ratios and for their stress tests, there was a bit of concern. But the good news is the Fed came out last Friday and said, you know what? We are not continuing this program. Make whatever changes you need to make. And maybe, again, now we saw that yields were calmed down after that knowledge was out. Spiking a little bit today, ever so slightly, but that's a big issue. As a matter of fact, the theme of the week, one of the theme is that we're talking about is yields. Clearly, yields have been working in favor of certain parts of the market and not in favor of other parts of the market. And if you need a lesson into understanding, look up Capital Asset Pricing Model, CAPM. CAPM. That is everything you need to know about what's happening with some stocks and maybe the tech stocks that you're invested in and when rates go up and why, in fact, prices are coming down. The KRI, which we looked at over the last few days, I put that over on Twitter, worked off some of its heat. We saw that big pop up and a cluster form above the 4, actually up into a 5 right about here, and then started working it off a little bit. Actually got into negative territory, 0 flat yesterday. Market in equilibrium. What that means is the trend usually would stay with what it is. Now, where's the trend? Again, very choppy, right? You know, we kind of up and down, then up and down. The trend right now, if it's going to stay, and you ask me, well, what trend is that, Andrew? I would say that the trend is Nowhereville. It's just a up, down. So that's a consolidation. If we kind of drew a couple of lines right there. Let me just do that real quick. A couple of lines right here. Did I get the other one? Click. Got this consolidation range right there that things are moving in and out of, a little bit above, a little bit below. And I think that's going to be continuing. That's all the way back to February. I mean, look at where we started this kind of consolidation, February, 3rd. So it's going to break out either way. Could it break down? Very possible right here. We did see that flush down back in the beginning part of March here, and that was a big issue. Whether or not we're going to get back to that or not, it does look like this is the S&P. So, I mean, we can look at different ones, but right now there is a consolidation. So what the KRI is telling us is probably not much of a change of what's happening. The DMA, the daily moving averages, are definitely in play. The 50-day, the 200-day are in play. So I like to sometimes put that on the charts along with the other things we look at, because we know that institutions are looking at that. We know that they are looking at this arbitrary line, which has basically no meaning except for the fact that they all follow it. And if they all follow it, it then has meaning. Does that make sense? You know, they make meaning out of something. And therefore, if they make meaning out of something, well, then what happens is we have to respect that. So the DMAs are in play. And again, the theme of in and out of favor, as we've talked about, you know, the slosh from from fixed income to Bitcoin to gold and to growth stocks. It's kind of all just in a terminal moving around the markets on a regular basis. One of the things also I saw that I thought was really important was over the last few days, we saw IPOs opening up below their opening price. So we had an IPO price, let's say at $24, it opens up at 17 or 18. IPO price at 12, it opens up at 11. That's a far cry from some of the other IPOs we saw recently that would open up at 50 and then shoot up automatically right away to 75. So, this is a big issue that maybe there's just too much overall supply in the market. There's just so much that people could buy. I mean, I don't care that there's free money out there and all that. There's just so much inventory that could be put on the shelves that people are then looking at different areas and saying, okay, maybe I'll take a little bit of that, but then maybe not buy that, and then buy this, and then not buy that. So there's a kind of a strange scenario that's going on right now. And I think a lot of it has to do with the fact that there's just a massive amount of supply and people are just getting awfully confused on what they want to buy and what to look at, not to mention all the SPACs that have come to market. ARK Investments, a lot of you have ARK. I'd ask in a poll maybe so it's a little bit more private, but these areas of the ARK Investments, the fintech or the innovation fund, all have been absolutely just trashed over the last several months. Down 20, 30%. And a lot of people had some very significant assets figuring that this kind of run that they had last year is going to continue. Now, we see this a lot, right? The chase for returns goes on for some time until it doesn't. My concern was that they owned large parts of certain areas of the market that had very significant amounts of sway on the markets themselves. And they were continuing, the management of ARK continuing to push into those areas, particularly like a Tesla. And they moved up from an 8.5% to a 10% position in their flagship fund. And what's interesting to note is that that itself had a significant impact on markets, and particularly NASDAQ, when you saw that Tesla was moving up very substantially. Problem is that when people are starting to bail out on it, what you find is that a lot of the movement that you'll see is implicitly negative for areas of the market, and that's a big concern. There's just, again, so much money they have to really move things, only so much they can actually hold inside of a portfolio. Many new investors are getting crushed on this. Momentum, growth names attacked, and then they settled towards the end of the week. Already we're seeing the Qs were down about 65 or 75 in the morning as rates spiked. Now it's coming in a little bit. We'll see how that plays out into the morning. I'd expect probably a little bit of a wishy-washy wash down in the beginning of the day again. It all depends on yields, but I would expect that we're seeing a little bit of a relief rally off the fact that there's no inflation according to PCE, which is the Fed's preferred measure of inflation. And again, we all know we're going to see some really crazy numbers come up, which is based on what we call the base effect. We're going to look back a year and we're going to see that, in March and April and February of last year, there was a significant amount of deflation, price deflation. And when we now compare that to where we are today, well, that's going to show a huge amount of inflation. And while that may be transitory and temporary, the fact remains that there is a significant amount of headline noise that we're going to have to fight through. Inflation could be ugly over the next few months. There's no question about that. Today, we did see the PCE prices at a 0.2 versus a 0.3. Personal income fell 7%. Spending fell 1%. It's kind of the end of the line on some of the stimulus that happened and the big move that happened in January and through December. Economics earnings next week. We got the Case-Shiller Home Price Index. Remember that next week is the last week of the month, last week of the quarter. Today we're going to have some window dressing go on. I'm sure there's going to be a lot of interesting moves throughout the day today because we have this end of month phenomena going on. We also have ADP Employment and ISM Manufacturing Index. What's interesting to note about next week is that we have the ADP Employment, but we don't have the official BLS employment, the official unemployment rate and all that. And the reason for that is next Friday is Good Friday, and the markets are closed. So it is the first week of the month. Usually you'd have the BLS number, the Bureau of Labor Statistics, coming out with their official unemployment numbers and all that, but that's going to be postponed due to the fact of Good Friday. So with that in mind, there is no webinar next week as it is Good Friday, and we will take that day off. By the way, anybody that is celebrating either Good Friday or Passover, I wish you the best and wonderful things for that. All right, couple of things other than note, and we're going to get right to the stocks here. First of all, if you are a current trial participant and you convert over to a actual subscription, well, what you'll get is a 4-hour free course on. Let me just kind of cutting and pasting here. There we go. 4-hour free course on educating you and training you, etc. So you can let us know. Send an email over to support@TriggerCharts.com. There's a 10-day free trial for all of our indicators over on the wonderful TradeStation platform. So check that out. I think this week, by the way, there was a great guest we had on the Disciplined Investor. It was the president of TradeStation, actually. So listen to that. So you got all that. There's a 10-day free trial. You heard about, the coaching. We talked about that. All right, some of the stocks we're going to talk about. Let's get to that. We're going to get to yours as well. Yeah, Baidu is kind of interesting. I'm not exactly sure what's going on. I got to look into a little bit more of why this turnaround and kind of dropped even further today. This is a daily look and a 30-minute look, and the top is this Commander series in a nutshell right here. This is what it looks like. You get a multi-time frame on the top here, which is showing us 30. See that 30 right there? Let us do something, okay? Let us do some highlighting and circling of what this is. Okay, so let's see. We have 30, we have 60, we have 240, we have daily, we have weekly, all right, right there. Then we have a daily chart down here, a 30-minute chart down here. And what you see also in this is that we have multiple time frames going across for one particular name. So we're looking at right here, for example, Virgin Galactic. Or you're looking at Fedex, or you're looking at Neo, whatever you're looking at right here. Basically, you can look across multiple time frames at a glance. No one else has this, by the way. This is very powerful, extremely powerful. Once you get in the hang of figuring out what this does and how to just spot this with your eyes, again, color-coded for us who really like to understand what's happening, you'll say, hey, there's a short profit on a weekly on here. Nothing happened in between. We got a long profit here. Really, is this an area that I want to be involved? A lot of consolidation. However, we're seeing that on RH, for example, we have some long on a 30, long on a 240, nothing here, but hey, daily long alert and a weekly long alert, that could be something that could be very powerful. So again, looking at all of this is really, I think, important to consider. And when you look at this, you very easily can discern what is happening with a particular name. With that in mind, we have RH right here. We're looking at the dailies. Again, for educational purposes, I'm showing you dailies in 30. You can switch this up to whatever you want. You want to do weekly, you want to do 5-minute charts, whatever you want, you could do, and it works just the same. It's all the same principle because you have time and volume on every single one of these. On the bottom here, you'll notice when you look at the bottom to the right, you'll see that there is another charting indicator that's separate from the Commander series. It's called Aileron. We put together many different proprietary and some non-proprietary indicators inside of here and do a scoring and weighting system to come out what the momentum is, the oscillation, where it's crossing, what's happening, and where it looks like the momentum can match where our support and resistance is to give us a 1-2 punch on the potential. So RH, these kind of moves from 480 to 529, again, still within a range. Remember, I always like to use my box tool here. So it's still kind of within this range from the top here. Looks like it's clearly starting to break out over the top. A little bit of resistance in between here. Reported earnings yesterday, thinly traded. People like it. A really great, if you look at, this is from the bottom here, 100 up to 520 is a 5-bagger. That's pretty substantial. Who would have thought people buying coffee tables for $5,000 just like crazy? Tesla, a bit of a downtrend ever since they mentioned that they were going to be involved in the area of Bitcoin, we can see that clearly. There's no mistaking the momentum is to the downside here. Great short opportunity that was called right here on the daily at 790. Closed that at about 598. Right now in a gigantic consolidation range. That is, we kind of targeted that somewhere about the 572 level, which is right in between that altimeter levels, but also right on this line. Kind of broke through here, overreacted, popped up a little bit. Again, a cult stock, but does not seem to have the Momo going on its side right here. This was all this lift after it got added to the S&P 500. Actually, that was December. So it was like December something right here. It's underwater. Here, over here somewhere. It's definitely underwater from where it was put into the S&P 500. SPCE, this is a name that had a great run for a long time. We kind of looked at these levels here, right? 24.51, which we got to actually a couple weeks ago, and 51.11. You know, you want to wait for this name to start moving, and it could be a real screamer here. This is the one thing they're waiting for is May for the launch of their spacecraft. And there's a race right now to get to see who's going to be in the commercial business for space, whether it's going to be Blue Origin, whether it's going to be SpaceX, whether it's going to be somebody else, or Space, Virgin Galactic. I mean, I still like this name from the idea that once I do think they're going to show that they have a test launch, this could really move significantly. Two things happened here. Was a breakdown after they said, hey, we need to postpone our test launch into, I think it was May. But we clearly identified that right now in a kind of a nowhere zone at this point, kind of waiting at this level. Not a lot of trading activity going on there. Fedex popped up, nice little move after its recent earnings. Again, everything seems to be consolidating dramatically right now. The charts are a little bit less obvious than they were in the past. I think you need to get above this 278 line going on right here. Let me take a couple of your stocks so I don't forget them here. GDXJ. Van Ector, Vectors, Gold, Junior Gold Miners. I think this is, yeah. I mean, this is going to react with gold. So if you think that the gold is going to do well, really kind of track what's happening with gold, and that's going to pretty much follow this line here. You're at some support here. I think that there's a possibility you could probably bust down about 42.88. That goes back a little bit further. If you can see that right here, there's a really good support line right there. So I would draw this in on your chart because I think when you look at this and you can see this very clearly right about there. Was that 41.16? I mean, there's really great support right there at about 40.60. That's not what you want to hear if you're a holder. I would say that probably right about there also lends itself to some really good support right about the 42 line that we talked about a minute ago. That is consistent with the fact that we're seeing this move lower. There's really nothing below, a lot of darkness here, not a lot of support when you look from right to left. Going back to April, very choppy action right here. I'm assuming GDX looks about the same. Give or take, not as dramatic, but you know, you see these levels that just get oversold and trend down, momentum down, consistent with what we're seeing here. I don't know. You would think gold would have done a lot better in this kind of environment. Somebody's asking me about ATO. ATO looks like it's breaking out here a little bit. Again, chart that has been a massive consolidation, a lot of overhead right with where we are here. I think we talked about this. I have a line. Somebody asked me about this before. You know, I also challenge you, if you're asking about the same stocks each and every week, what I challenge you to do is go find some out there that you're not familiar with, do some research, look at the charting, see if you see something that has an opportunity. There's a resistance here at about 97 or so. The aileron looks really positive right now, a little bit overdone after this move from 85 to 90 or so. I mean, I think you have resistance in this entire range all the way up and down right here. So I don't, you know, unless you got some really good catalysts that are going to go on for this, I'm not exactly sure where that's going to play. We got BFT, somebody's asking me about. Foley acquisition, yeah. You know, this was SPAC. It's in the EV space, I believe, or the car space, I should say, at least, if I'm not mistaken. Very volatile. SPAC's been out of favor. Bottom line, got to get over about 1650 to really get exciting here. Hitting support. Remember I talked about hitting support? Holding. Here you drove right through, hit it perfectly, got down to it in this range over to the right, and then hit it perfectly, bounced off it yesterday, up slightly in the pre-market. What else? Pins. Yeah, Pinterest. All these names are coming in. I mean, again, you know, what was a great year? If we look back to the left here, which we could do that if you want. I mean, wow. Woo, look at that move. It's just and then an overdone move right here. And then now just a giant consolidation. I mean, if we take out this range on the top here, just kind of black this out. Just get rid of this right here, right? And take a look at this really very simply from this right here. We haven't moved since December. A little up, a little down. Trading opportunities galore. I like it for that. Long-term hold, questionable. We're going to leave that box on there for the future. Someone asked me about, WSM. Yeah, no kidding. Crazy. Look at that. Look at that. We looked at this kind of range a few weeks ago. We looked at where we were. Somebody asked me, popped up. We own this actually for our client portfolios. And the earnings numbers were just off the hook. Kind of came in a little bit, finished up. Let's see, right? Oops, right here. Let's see here. Price closed where? At 168, yeah. Moved back up yesterday and 174 today. Seems a little ridiculous that an overpriced place like this that charges 10 times the price, seriously, 5 to 10 times the price of what you can get, or at least double, if not more, of what you can get the same thing over on Amazon is doing so well. But people are staying at home. They're cooking. They're finding that passion, which I think is awesome. Neo, another EV play. China, that's the Baidu. Let's see where Baidu is. I'm kind of curious. Down 7%, down another $14 today. Got to open up 189. Going to open up. Yeah, there's some support here, but not a lot. Yeah, just this island right here. I mean, I don't know. They're trying to take it down to 140 again. Let's see what that would be. Yeah, we were flat top for a long time. This overdone here. Head and shoulders pattern. You see that? Head and shoulders. Let's see if we can draw this really. I mean, if you believe in that, I think it's interesting to look at. You got right here, right here. So what we do is we take the length here, take that same length, which is there. We're just going to estimate this here and take this down. Look at that same length and take it down to here, about that price. That's just an estimation without going through all this. That price right there is about, 149.50. So where are we now? Still at 189. You have some ways to go. That's a rough sketch. QQQs, we're seeing that roll over. But again, look at this. I want to show you this. You know, holding this level on the bottom here, just can't seem to break down below that too well, which is good. Silver, gold, Bitcoin, holding on its level as well. Bitcoin works with this as well. Seeing this turtle change of character right here for Bitcoin, starting to see the momentum change dramatically that we have had on the upswing forever, right? This upswing, that's the first time we're really seeing some significant selling going on. That should be an alert. Jets. This is of course, the ETF that handles airlines. A lot more people flying these days. Nice run recently up to about the 28.5, 29 level. Dipped down to 25, so about a 10% correction or so on that. Momentum changing here. I'd look for support probably at the 24 level. Where are we at now? 26.83. Okay. Gamestop, what do I want to say about that? You're going to break out above this at the 204 level. Obviously, a total, ridiculous. I can't even talk about it. Can't even make any sense out of that. Garmin's a name we're looking at. A lot of consolidation, big consolidation here. Looking to see where this breaks out. We've seen this before, right? Move up, consolidate, move up, consolidate. And if we can see that break above, I mean, boating is really hot right now. Look at the stocks of like Brunswick or Marine Max. There's a few names out there that are specific boating names. Wow. Unbelievable moves to the upside on that. So pretty cool. Let's see what else we have here. Anybody else have any names? Okay, not on that list. All right, what else is going on? Let's take a look at the movers real quickly. We got Wanfu Education. I just like saying that. Wanfu Education up 80% this morning. Take a look at these. Always try to put these inside of a workspace to kind of look what's happening throughout the day. We got Future FinTech Group, which is getting beat over the head for a while here. Now up 11%. We'll see if that holds throughout the day. Skills, another one. These are the warrants that got moved. Naked Brands always moving around very dramatically. What else do we have here? Titan Machinery, interesting, down 12%. Vuzix, maybe they're thinking it's Vizio, and they're taking it down. Let's see what else we got here. GSX Tech, this has been a favorite short of some of the major newsletter writers and all that. So with that, we're going to end this conversation. We're going to have this up on the YouTube. for you to look at. You can also check it out over on TriggerCharts.com. Remember, next week we are not meeting. Not meeting next week. So thanks, everybody, for joining me today. And we are going to end it right there. Have a very profitable day. Thanks, guys. Appreciate it. Thank you.